Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. With me is Mahima Vajrajani, and we'll take you through the next 1 hour of trade. And we're looking at a little bit of a consolidation in the benchmark Nifty 50 at this juncture. A soft start, if you can call it that. In fact, the indications were that we would start about 100 points in the green. That did not pan out, and we've been shuttling within a very narrow range, as you can see on the screen. But do remember that you saw a takeoff at around 12:30 yesterday, and we went to the high point of the day very, very quickly. 25,000 was breached. At this juncture, we're holding just above that 25,000 mark, and so sentimentally, you would want to look at that 25,000 mark be held in trade. Once again, you have the broader markets that are outperforming, as they have done over the course of the week so far, barring yesterday. But you have the mid-cap index that's gaining about 0.7%. The small-cap index is up about close to 1%, about 0.9% at this point. And so the market breadth is not going to be too bad. It's probably going to be a decent amount. And in fact, that is true. It is favoring the advances at this point. But let's look at some of the sectoral performers, because you're not seeing too many big moves sectorally either. You see that, of course, I should have said that apart from defense, you're not seeing too many big moves, because the defense pack once again up as much as 5%, and several stocks, including Zentech, doing particularly well in trade today. On the other end of the spectrum, you have IT, which was an outperformer in trade yesterday, gaining 1.2%, down about 0.9% in trade today. Pharma down about 0.5% or thereabouts. So not too much to speak of on the sectoral front. Very quickly, let's also look at the contributors on the Nifty 50, just to round things off and tell you what's happening. And that should tell you that on the downside, you have Bharti Airtel. There's a block, of course, to talk about. And Singtel is selling stake, and that's having a bearing on the stock price. Bharat Electronics right on top of the list, contributing the most. HDFC Bank, ICICI Bank as well in the top contributors. Now, before we get to anything else, let's talk about an exclusive story that has been picked up by my colleague Aishwarya. The Department of Telecom is likely to clear Amazon Kuiper for satellite internet rollout. Kuiper may use a trial launch strategy similar to what you saw with JioFiber. And Aishwarya has this report telling you what this update is all about.
Well, satellite communication has been the buzzword lately, with Starlink applying for a license as well as it getting a letter of intent issued by the Department of Telecom. Following in line on that path is Amazon Kuiper. What we're learning from our sources is that the Department of Telecom is likely to issue Amazon Kuiper a letter of intent, followed by Starlink very, very soon. Now, Amazon will be bringing, just like Starlink and Airtel and Bharti Enterprises, OneWeb, high-speed satellite communication services to the Indian market, and this will, of course, mark their debut. Amazon Kuiper also has the second biggest capacity in terms of their satellite constellation network, which is about 3,200 satellites in the low Earth orbit that will provide high-speed satellite internet services in various markets, including India. Now, Kuiper, let's talk a little bit about their Earth stations and what their devices will look like when that will be operational. Kuiper is likely to be fully operational in the next 18 to 24 months, is what people familiar with the matter have told us. They're also considering trial packages during their introductory or launch period, just like JioFiber did initially introduce us with free devices. And also they may be considering or assessing different heavy discounts on these packages when they do start their services in India. Like I mentioned earlier, the company plans to launch over 3,200 satellites, making it the second largest capacity. Starlink has about 6,000, over 6,000 satellites, and that makes it a SATCOM company with the largest fleet of satellite constellations there is globally. So that's what Amazon Kuiper's devices and ground network will look like. They're also finalizing over 7 locations in India to build their ground stations or earth stations, also called as gateways. In India is what, and they've also identified certain locations. This is what we've learned from our sources so far as Amazon Kuiper's India debut is concerned.
All right, Aishwarya, thank you so much for breaking that down for us. It's a very interesting update, and we'll have to wait and watch out for as to how the execution takes place exactly. All right, with that, let's also welcome in our guest for the day, Jatin Gedia, technical research analyst at Mirae Asset, joining us now, and Astha Jain, senior research analyst at Hem Securities, joining us now. Welcome to both of you, and a very good morning to both of you. My first question is from Suraj, who's writing in from Kerala. He's holding 1,000 odd shares of Kalyan Jewellers bought at 630 a piece and wants to know whether he should hold or sell at the moment, sitting on a loss of 74,000 odd rupees. Asa, good morning. I'll come to you first. Kalyan Jewellers, what's the view like? Q4 was decentish. Not very good, not very bad, but the overall growth was led by rising gold prices. What's the outlook like?
Yes, hi. Good morning to all of you. See, talking about this counter, in fact, the strategy of the company is always to expand its footprint. So, in fact, they are working in that direction also. And definitely the impact of gold prices can be seen here. So, overall, I believe that the kind of future strategies this company is looking after, we are basically thinking that the stock is such which can be remain invested in, and hence recommending a hold on this counter. And I don't think that losses should be booked at the current level. So one can remain invested in. However, upside price target which we are giving is limited to only 580 to 590 at the current levels.
All right, so that's the view on Kalyan Jewellers. Speaking of jewellers, another jewellery stock is not having the best morning, and that is PN Gadgil. It posted its numbers. It's down about 4%, 4.4% or thereabouts. Not the best quarter. If I remember correctly, the value growth is there, volume growth is not there, right?
Volume growth is not there, and the thing is that they are seeing more sales in terms of their bullions. So they're not getting the share of making charges that they generally get in jewelry, which is why numbers are getting impacted. And this shall continue if gold price continue to rise. People will go ahead and buy bullions because investors are always looking for getting more in terms of gold and not spend on making charges.
Yeah, well, let us know what you think about that. Are you going to go out and look at jewelry? Of course, if you have a wedding to attend to, or if it's your wedding, then you don't really have a choice. Let's talk about that another day, though. We've got Dheeraj on the phone line, who's calling us from Hyderabad. Hi, Dheeraj. Good morning. Thanks so much for calling in. How can we help you today?
Good morning, sir. My query is regarding Adani Green. So I bought 450 shares of Adani Green at 996 rupees just now, today.
Okay.
I have seen a fresh breakout in the chart.
Right.
I'm expecting good returns in next 1 or 2 months. So is it the right call, or should I enter at lower levels is my query, sir.
Okay. And so considering that you have bought it based on your understanding of the charts, what are the levels that you had in mind for Adani Green for the next 2 months?
Around 1100, sir. 1060 to 1100, sir.
Okay. All right. Jatin, very good morning to you. How would you read the charts, and do you see these levels playing out?
Yeah, good morning, Alex. We believe that Adani Green has formed an inverted head and shoulders pattern. Now, this is a trend reversal pattern because it has formed at the bottom. I think now the trend has reversed from negative to positive. On the upside, the pattern targets are placed around 1100 to 1150. So I think the trader has got in at very good levels. I think he should continue to hold for a couple of months. He should place a stop loss of 930 for this trading position, and he should continue to hold it for a couple of months. 1150 to 1200 is the target area.
With regards to where Adani Green stands, and standard disclaimer, Adani Green is also a part of the Adani group of companies, and NDTV Profit also a part of Adani group of companies. All right, the next question is from Naveen, who's holding VLS Finance, comparatively a very small company, 800 crores of market cap, 200 odd shares bought at 401 average price. He's saying that he's sitting on a loss of 30,000 odd rupees right now, almost 30,000 odd rupees, and wants to know whether he should continue to hold or sell. Jatin, I'll again come to you on this one. What are the charts indicating for VLS Finance?
See, the trend is actually negative. We believe that this pullback that we have seen from the levels of 220 to 260 odd levels should be considered as an exit opportunity, because the overall weekly chart structure is still negative, and I'm expecting this stock to slip down towards 220 odd levels again. So at this point of time, this pullback should be considered as an exit opportunity.
Sell is the view coming in on VLS Finance as far as the charts are concerned. All right, the next caller, Jacob, is calling in all the way from UAE. Jacob, a very good morning to you. How can we help you?
A very good morning to you. I just wanted to know regarding one stock, Larsen & Toubro.
Okay.
I already have 10 shares of Larsen & Toubro at the price of 3,300.
Okay.
So I wanted to accumulate more of this one.
Okay.
And I wanted to know what should be the target price. So I don't wanted to buy at the price of 3,600, which is going on.
Right.
So I wanted to know whether the price may be coming down to 3,600. That's what.
Okay. Jacob, just wanted to understand what was the thinking behind buying L&T, one thing, and you are looking at this investment from a longer term perspective?
Correct. I'm
Okay.
looking for a 5 to 10 years investment. I was looking for the L&T because it has a multiple type of infrastructure development. They are coming into data center. They are coming into different entities, which is they're into a futuristic business. That's what.
Okay, got your point, Jacob. I'll take this up with Astha quickly. Astha, your view on L&T. Overall, great set of numbers in terms of Q4. Order book also strong in compared to what they'd guided. They've done better in terms of revenue as well as order inflows. What's the view like from a longer term perspective, let's say 5 years down the line? And what are the levels to enter into this particular counter to average out? Because Jacob's buying price is 3,300 right now.
Right. So first of all, I wanted to say that whatever buying the viewer or the investor has done, continue with it with a price target of 3,800 to 4,000 at the initial level. Now, here the point comes why? Because first of all, they have a strong order pipeline, and with the acquisition of IntelliSoft, they are able to develop their software skills also. And we know that this company has shown very strong guidance, and in fact, they are retaining their guidance which they have given earlier. So the kind of results this company has posted on the back of the strong guidance which they have given, and the kind of acquisitions now they are doing in their different segments or fields, I think this is well placed to move till the level of 4,000. Where to enter is the major point here. So I believe that accumulation can be done at around 3550 to 3570 odd levels in case if it comes to those levels.
Yeah. Okay. So there was a question from Rohit, which I want to take next, and that has to do with either Indian Hotel or EIH Hotel, which is, by the way, it posts its results today, if I remember correctly, EIH. So watch out for that. And we've seen a few hotel companies, Astha, that posted decent set of numbers in the quarter gone by. I'm just wondering whether, and I think that you normally suggest holding off on making fresh investments in a company just before earnings. So I guess you'll advise to hold off on that. But why don't I ask you about the overall investment in hospitality? Where would you suggest that you deploy? And Rohit wants to know, he's writing from Muscat, Oman.
So, in fact, Indian hotels and EI, both these counters are looking good to me. Yes, for Indian hotels, we can say that it is facing some sort of turmoil, basically due to not so very great numbers which this company has posted in their quarterly earnings as well as yearly earnings. But regarding EIH Hotel, we are still positive on this counter. So, in the short term, we believe that EIH Hotel is well poised to move towards upward level of around 420 to 430. So, we believe that EIH is better placed in the short term. However, in the long term, in fact, Indian Hotel will also deliver on the expected line. Looking after the overall hotel industry, I think these counters will now start showing very good performances, because now I think whatever concerns were there regarding geopolitical, etc., I think that is now been completely not there or disappeared. So overall, this industry is looking great to me. And the EIH Hotel in the short term is looking better than Indian Hotel, but both these counters are good for long term as well.
Okay, all right. So that's the view on the hospitality space and specifically on EIH. Paramjeet is calling us from Himachal Pradesh. Paramjeet, namaskar. How can we help you today?
I'm having Mindra Lifespace 5,000 shares at the rate of 310.
Okay.
Want to know long term as well as short term.
कब लिया था ये शेयर आपने?
2 months back.
Okay. And did you buy it based on the fundamentals, or did you see the price and say ki it is a good value to buy it?
It was in my watch list from last 3 years.
Okay, okay. So then what drew you to this company? Why did you decide to finally buy it? The reason I'm asking, Paramjit, is because you bought it at a very attractive level.
Market capital is less than 10% of its total value of assets.
There you go. I'm glad that you said that. Asta, he's clearly been watching this stock for a while, and he's finally decided to pull the trigger when he's looking at the market capitalization, which is a great way to do it, right? If you see that the assets that a company is holding is much more than the market capitalization, that indicates, at least on the first level, that there is value to be had. So what's your view on Mahindra Lifespace?
So Mahindra Lifespace is looking good to us because what we have seen that there is a pre-sale speed, and in fact the kind of project pipeline this company is having, it is very, very strong, very, very robust. In fact, now they are moving towards Pune, Bangalore, these regions. So I think the strategy is working great for them. Overall, I'm pretty much positive on this counter, recommending a hold with a price target of 370.
Okay, so that's the view with regards to where Mahindra Lifespace stands. The next question is on Afcon's infra. Sanjeev from Singapore is writing in. He's holding 1,000 odd shares at an average price of 475 and wants to know the long-term prospects of Afcon infrastructure. It's a fairly newly listed company, Asta, so I'll come to you on this one if you've had the chance to go through and have a view on Afcon's infra.
Yes, it was, in fact, the IPO came into October, and we have released a note on that. So my view on at that time is that we were very much, neutral on this counter, and we have not given a subscribe rating. There were reasons behind it. First of all, I believe that this counter was fully priced when the valuation part is coming. So that was not giving comfort to me, and we have seen that still now this company is not able to move above its issue price. Issue price was 463. So they have a strong, track record of executing large projects, and the financial performance was also very good. But the kind of valuation this was coming at, I think it was coming at a price to earning valuation of around 38. And that was really very high. And that is also very high at the present moment of a time. So I think let's wait for some more quarters to come, and maybe the good results can increase the EPS and reduce price to earning multiple and can give the valuation comfort. But right now, valuations are heavy, I think, in this counter, and that's why it is not working great.
I'm glad that our viewers are listening so carefully. Because Satyan has pointed out, rightly so, one of our viewers, that EIH Associated Hotels posts its results today and not EIH. Thanks so much, Satyan, for clarifying that for us. I'm going to go to the next caller. Kunal is calling us from Chennai and asking about Tata Steel, I believe. Kunal, good morning. You've bought at levels of 107 rather. Good price. What did you see in the stock that you liked?
Hi, good morning. So I think it was the brand, to be very honest, and there was a split that happened which reduced the share price as well. So I actually looked into the technicals and fundamentals of the company and seemed very strong. My query is with regard to 10 or 15 year, period, and I'd like to, in fact, increase quantity in this if possible. So wanted to have that outlook, please.
Okay, I understand. Thanks so much for your question. And Kunal, kudos to you for having studied the company as you have. Well, it's a very long-term view that you're seeking. I'm not sure if Asta is going to have a view for 10 to 15 years, but at least for the foreseeable future, Asta, considering that the company has made certain statements about its overseas operations, its operations in India are in reasonably good fettle. There are certain measures that have been taken by the government to protect domestic steel manufacturers, and global factors are now proving to be a bit of a tailwind, considering that China is coming back onto the spectrum. That is always good for metal counters. All of those things working in favor of Tata Steel. Would you say that you can add more?
Yes, one can add more. Now, in fact, they are doing certain, reorganization programs also, and they are doing various things which is giving comfort to us. In fact, what we have listened in the management commentary that the impact of the tariff is also not very high there in their India and the European operations. So that is also giving comfort to us. So in the long term, it is a good bet in the metal space. We are positive on this counter, recommending a hold with a price target of 180 to 190 at the current levels.
Okay, so that's the view with regards to where Tata Steel stands. Our next question is from Tejas, who is writing in from Nagpur, and he's asking about Vent India holding 10 shares at 10,500 rupees. And now that the OFS has come with massive discount, should this be a red flag is his question. Looking for a fundamental view on this one, Astha, I'll come to you. If you've had the time to look at what has happened and what are the developments, what's the outlook like in terms of Vent India, and should the person continue to hold?
So it is into the abrasives, and what was disappointing is that they have shown degrowth in their Q4 earnings. In fact, if I talk about their full year of FY25 earnings or profit after tax, it was lower than FY24. Now, with the weak earnings, what is the major disheartening in this whole thing is that their valuations are on a very higher side. They are quoting price to earning multiple of around 52 or 53, which seems to be high in the light of the fact that the earnings are quite disappointing. Although industry price to earning multiple is same, that is 53, 54, but we don't find so much valuation is justified at this point of a time when the earnings are not supportive. So looking after all the factors, we are not very much comfortable with this counter. I recommending partially exiting from this counter and remain hold the partial quantity. Maybe the quarter, the next quarter, maybe that can provide some sort of comfort. So in just that hope, recommending partial exiting from this counter.
Partial exit from this counter, and it's interesting because almost 37.5% stake, full promoter is trying to sell everything via OFS, and yesterday, up till yesterday, it was subscribed for 2.5 times on the base and around 2 times with green shoe options for the OFS specifically. So that's the update with regards to where Vent India stands. All right, the next question, Narendra is calling in from Hyderabad. Narendra, very good morning to you. How can we help you?
Yeah, good morning everyone. This is Narendra. So actually I have 5 lakhs. I want to investment in defense stocks. Can you tell me, can you suggest 2 stocks which is a better performing for one year long-term position?
Okay, I got your query, Narendra, and I believe you have 5 lakhs to invest in right now.
Yes.
And you want to invest the entire 5 lakhs in defense sector only?
Yes.
Okay. All right. Okay, I'll take this up with Astha then. Astha, he has 5 lakh rupees to invest in right now, and he wants to know 2 defense stocks to invest in. Just an extension of that question I'd like to ask, should he invest entire 5 lakhs in defense counters only, or should he diversify into 4 or 5 different stocks?
I think 50% into defense and 50% into the sectors like IT, which is looking good to us at this moment of a time. So there are other sectors also. So not entire amount we recommend to put into one space, that is defense. Maybe 50% or maybe 40-60 can also work. That is 40% in defense and remaining 60% in some in the IT and some in the real estate sector, because we believe that in the falling interest rate scenario, these sectors looks to be very, very attractive. Automobile, real estate, and IT is working great right now, as we have seen on the back of a strong earnings and on the back of reduced concerns regarding the tariff war. So this is what my recommendation is: don't put entire amount. Now in the defense space, Zentech is really, really good, looking good to us. However, they will be posting their results on 17th. That is tomorrow only. So wait till the results come. But we are positive on this counter, along with HAL, BEL. And in the shipping space, it is Cochin Shipyard, which we are liking at this point of time.
Astha, I'm so sorry. I was actually trying to pull up the details on Vent. We spoke about it, right? Vent India, and so the German entity Vent GmbH is selling its 37.5% stake. 37.5% is held by Carborundum, which is part of the Murugappa group. So the question that I have is that materially, apart from the fact that there is a complete exit by the foreign promoter and joint venture partner, does anything materially change on the ground for the company? Its operations remain, and so what I'm asking is that if it was trading at 10,000 plus just last week, would you not say that the multiples suddenly move very much in favor, and you should consider looking at it at least at certain levels once the dust settles?
Yes, but not at present point of a time, because when the results are not supportive, although this company has a long history, it was established in 1980 and they are leaders in super abrasives. So one of the market leaders, I can say, but results were really, really disappointing. And this is not about the quarterly results. In fact, their full FY24 earnings, the profit was lower. 25 earnings profit was lower than FY24. So somewhat I believe that this stock can fall more on that basis, and hence right now there is no logic in staying investing in this counter. Hence I recommended partially exiting from this counter.
Exit the counter is the view coming in from Asthan Vent India. All right, the next question is from Harshit, who has 50,000 to invest in right now and wants to know whether he should invest in BEL, Cochin Shipyard or Great Eastern Shipping. His holding period is from a 7 to 10 days perspective. So Jatin, I'll come to you quickly. Any of these charts looking attractive enough to invest 50,000 rupees right now?
See, all of these counters have run up quite a bit in the last 1 week, or we can say last 5 trading sessions. So it's not a great trading opportunity at this point of time. So I think he'll buy it at the highs, and thereafter we can see some consolidation next week. So I think as of now, the opportunity is gone from these counters which he has suggested. But wait for an opportunity at dip. If I have to give levels for one of the stocks that technically still has a certain amount of up move is Bharat Electronics. So I am expecting 380 to 395 odd levels in the case of BEL. However, considering it has run up quite a bit, I would suggest to wait for a dip towards 354, 350 odd levels, and then only get into this stock, but not at current levels.
With regards to where chart stands for all of these defense companies. All right, the next caller, Govind Kumar, is calling in from Hyderabad. Govind, a very good morning to you. How can we help you?
Yeah, very good morning, madam. Very good morning, Adhik sir, and all of you.
Good morning,
Thank
sir.
you for recording Kori take up of. Madam, actually, I have purchased GMR and Power Urban for 8 months or 9 months back, madam.
Okay.
At the time of just now reaching my level, actually.
Okay.
Can I hold some time at least for 15 to 20% return for at least 1 to 2 years, 1 year, madam? What is this fundamental view, madam? Because of I have checked in scanner, the debt concern is more actually. And GMR and Power Urban, and then that company share percentage also very low, madam, actually.
Okay.
Is it right? Is it safe side for long-term investment, madam, for GMR and Power Urban?
Okay. Okay, thank you so much for asking that question, Govind. I think you've done your research very well, but I'll take an opinion from Astha on this one. Astha, what he's saying is that debt is a concern for the company right now. Do you think that it's a good counter to remain invested in for the next 1 year?
At least for next few days, because on 19th we will be we will be having the results of this company. So at least wait till 19th, let the results come. Yes, the debt, in fact they have done some settlement also few days back. So yes, something is going on that part, but more clarity will come once the results get announced. So better be in a way wait and watch mode at least till 19th May, and then again he can ask his query here.
Okay, so come back to us when the results are out, and we'll get you another view on the stocks that you've asked about, GMR Power. We've got Ajay who's calling us from Ambala. Hi Ajay, good morning. And you're asking about a stock in focus. Crompton is doing particularly well in trade today.
Yeah, good morning sir, good morning ma'am. Ma'am, मैंने बिजनेस पॉइंट ऑफ व्यू से 3 डे बैक क्रॉम्पटन लिया था 3000 शेयर्स. मैम, आपका मैं व्यू जानना चाहता हूँ, क्या मुझे इसको होल्ड करना चाहिए? अभी राइट नाउ 346 के आसपास चल रहा है. बस ये क्वेश्चन पूछना था मैम.
आप मैम आस्था मैम से सवाल कर रहे हैं ना?
हाँ जी सर,
हाँ,
लास्ट टाइम मिनी से बात हुई थी आपसे 3 दिन पहले, तो उन्होंने मुझे बताया था कि होल्ड करना चाहिए तो रिजल्ट पॉइंट ऑफ व्यू से मैंने भी होल्ड रखा हुआ है। तो वही पूछना है कि इनको रखूं कि लॉन्ग टर्म में कि बेच सकते हैं इसमें।
जी, all right, all right. So Asta, you've heard the question. He's addressed it directly to you. So take it away.
Yes, one can remain invested in this counter. First of all, there is a great sigh of relief because now I think it has come above its cost price. So definitely, and the kind of results that came into, I mean, that has supported this kind of a move which we are seeing in the stock prices right now. They have delivered very strongly in the financial front. So hence, we are positive on this counter. Remain invested in this counter. Keep a price target of around 365 to 370 at the current level. I'm not giving higher price target. But yes, 365 to 370 can be the target which can be maintained on this count.
All right, so that's the view with regards to where Crompton stands, and of course, even brokerages have come out and hiked the target prices for this counter today.
48% upside.
Absolutely, and we're seeing that kind of moves in the counter as well. The stock is up 5% and it has maintained that kind of trajectory throughout the trade today. All right, the next question is from Satyan, who wants a view on DCX. For a fresh long is his question. Jatin, for DCX, do you think that DCX system, do you think that this is the right time to make an entry? And what is the kind of stop loss and the resistance levels and the support levels that you're observing on the charts?
See, in the case of DCX India, I think 380 is the resistance level, but recently the stock has run up from around 280 odd levels to 340. So I think if he currently holds it, then continue to hold. But if he wants to make a fresh entry, then the risk reward is not favorable at current levels. 310 is the level around which we have the 40 hour moving average. So wait for a dip towards 310 odd levels to make a fresh entry. Otherwise, continue to hold with the trailing stop loss placed at 328.
All right, Jatin, thanks so much for that view and indeed for joining us this morning. Asta as well, thanks so much for taking the time. Pleasure having you on the show as always. Right, we're not ending Ask Profit. We'll be back on the other side with a couple of more experts to take you through your questions. So I'd encourage you to stay tuned. We'll be back before you know it.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Well, yet another earnings conversation. Let me bring on board the Managing Director and CEO of LIC Housing Finance. We have Mr. Tribhuvan Adhikari joining us. Good morning, Mr. Adhikari. This is Harsh here. I want to quickly, sir, first start off by understanding how margins are going to evolve in this extremely volatile repo rate environment. Just take us through what has happened in Q4. What happens if there is no rate cut going forward, and what happens if there is? What action on the yield side, and how does that impact margins and spreads?
Well, yes, right now the margin scenario is pretty volatile. Yes, we've had 2 rate cuts in February and in April. Anticipating another one in the June MPC. Going forward, of course, we'll have to look what the signals direct us to. If I talk of Q4 last year, as far as liquidity was concerned, especially towards the latter end of February and March, there was a lot of liquidity crunch in the market, and as a result, it impacted our borrowings in the sense we could not get funds at the rates we were anticipating. So there was a lot of competition for the funds, and our cost of borrowing did go up. From the lending perspective, the rates were constant last year. Yes, we did take a call in the month of February. We increased our PLR by 10 basis points because the cost of borrowing did go up. Subsequently, after the rate cuts in April, we've taken a 25 basis cut across the board in the PLR. Going forward, very difficult to say what it is going to be because, yes, rate cuts are impending. Repo rates would come down. From the borrowing front, 55% of my borrowings are at a fixed rate, 45% are repo rate linked. So any downsizing in the repo rate would impact 45% of my borrowing book. The remaining 55% is fixed. So situation is volatile, very difficult to predict what it would be. Would like to wait for the first quarter to really come out with a guidance or an indication as to where we would end up in the current year. On a personal front, I feel the rates we are right now at 2.72. The NIMs are at 2.72 for the company. I believe we would be in that range more or less. Right? We'll have to be very, I would say, aggressive in ensuring that we get good borrowing rates, yes, from the banks as well as the open market through NCDs. And as regards our lending rates, we would have to take a call based on how our borrowing rates are impacted.
Okay, sir.
We've already taken, yeah.
Okay, sir. Sir, let me try and break this up a little bit better. Let me first start off. So you've given us a 55-45 split on fixed versus floating on your borrowing side, which is on your liability side. How does your asset side shape up in terms of fixed versus floating?
Asset is 99% floating.
Correct. So then likely shouldn't margins contract versus the 2.7% you've done this year?
Well, the indications do point to that. Right? But if I am able to manage my borrowing so that the impact of the rate cuts are compensated by lower borrowing costs, I believe I could make up for the lower lending rates through lower borrowing costs. So I feel at the most probably guidance, of course, it will be very early to give a guidance right now, but anyway, between 2.6 to 2.8 is the guidance I would like to give.
Point taken. And sir, what are you doing on the yields front? Prior to the rate cuts, you had given us commentary suggesting that you intended to hike your yields by around 10 basis points thereabouts. Is that intent still there, or does that change?
No, I don't think. See, we are in a very competitive market, right? Basically, I would not be sort of overshooting myself. Our main competitors are banks, because if you look at the HFC space and the NBFC space, most of them are into the affordable segment. We, as the biggest housing finance company, we are more into the IHL, or the individual home loan segment. 85% of my book is in the individual housing loan segment, basically dealing with prime borrowers. So as far as the lending rates are concerned, I don't think I have too much of scope in my hands to to keep them where they are, or on the other hand, to increase them is a definite no. I would have to stay aligned to the market conditions and see where my competitors are sort of placing their lending rates. But one thing we definitely need to do this year, and we've done it last year with some amount of success, is we need to diversify our lending. We need to move a little bit away from the individual home loan segment, which is a very competitive segment where the margins are not great, to the more margin accretive segments like I would say the construction finance or the project finance loan book, to the LRD and the LAP book. So that is what we've been trying to do. Last year, we've had some progress. Our project loans have grown by almost 47%, 47.5% to be precise. My LAP and the LRD book has almost grown by 20% as compared to a 5% growth in my IHL book, which makes up a major component of my lending book. So the focus this year, without losing sight of the individual housing loan, which is our bread and butter, we would like to diversify into these more margin accretive segments of NHI, NHC, what we call the LRDL and LAB book, as well as the project finance book.
All right, so earnings conversation taking you through what the results were for that NBFC. And it's not doing too much in trade, just about 0.2% lower or 1/3% lower, but it's recovered from the low point of the day. Watch out for LIC Housing, which has gained about 5% this week. But let's take the next question with our experts. We've got Sneha Poddar, Assistant Vice President Research Analyst at MOFSL, Motilal Oswal, and Amit Bhuttani, who's Derivative and Tech Research Analyst at Nirmal Bang. Thank you so much to the both of you for joining in, and pleasure as always having you on the program. The first question is on Tata Motors, and Gokul has got a question. He's bought 171 shares at a price of 990. He's been holding it for 10 months and it's now trading around 730. He's wondering whether it's a good idea to hold or sell. Sneha, the issue is that it's gone through a bit of an uncertain period. But some of that is settling down. Some of those headwinds are now turning into tailwinds. Would you say that you should hold on based on the fundamentals?
Yeah, very good morning. So as you rightly said, there were a couple of headwinds because Tata Motors has got good exposure to US, Europe and China market, and because of the ongoing trade war and geopolitical tensions, the demand had got impacted. But with Tata Motors resuming its supply to US post the bilateral deal that is likely to take place between India and US. So some headwinds are settling down. Even US and China has settled down on sat down on the negotiation table and actually worked out on a deal. So the headwinds are getting settled down. I believe there's a decent price to stay invested or make a fresh entry. You can, from a long-term perspective, actually look at 1,000+ kind of levels because these are very attractive valuations to accumulate the stock from a long-term perspective, and especially given the kind of the portfolio that they have built on the EV side, that's a very promising portfolio, and thus I would recommend to not exit at these levels and hold on to ride on the gains.
Okay, so that's the view with regards to where Tata Motors stand. Our next question is from Tejpal, who's calling us from Hyderabad. Tejpal, a very good morning to you. How can we help you?
Good morning, panel, and I wish you both a happy weekend.
Wishing you the same.
Wish you the same, Tejpal.
I want to have a long-term view on the standard glass lining. It's a Hyderabad company.
Right.
They had a recent IPO. We have only 2 to 3 quarter results, but I plan to get invested in this company.
Okay. Okay, and
I want to know the entry levels.
Sorry, go ahead with the query.
I want to know the entry levels.
You want to know the entry levels. Okay. All right, got your point, Tejpal. I'm not sure if we have enough data on the chart, so I'll take this up with Sneha. Sneha, standard glass, do you have the view on this particular counter, and what's the view like? Should we enter at the current levels?
Okay, we do not have a view on this company, but I can just share, from the industry perspective. Basically, this company provides the glasses to the equipments which is used in the chemical and the pharma space. So it's a very promising space to be in, wherein there's a very limited competition. So from that perspective, and given that the capex cycle is now expected to resume in the chemicals and pharma after a long pause over last few years, so probably the company can do well. But yeah, we do not cover the stock as such, so won't be able to give a proper view on it.
Amit, very good morning to you, and coming to you for this. Standard Glass was in the news because of a joint venture.
Because of a new strategic partnership with Japan's AGI Group, and that's a 20-year licensing in terms of assembling market glass line shell and tube heat exchange in India. And this is important because India currently lies on graphite heat exchangers, and Standard Lining is one of the important companies that provides that. The overall market size opportunity globally is $2 billion, and Indian market is also estimated at around 2,000 odd crores. So, and company has already received 150 orders for this particular product. So that's why it's a big win.
So, which is why Tejpal is asking about this. So, unfortunately, we can't give you a view on the fundamentals, but I'm just wondering, Amit, if you have a view on the technicals, do you have enough data?
Yeah, hi, good morning. So if we look at the overall setup, the data is very much less, but on the entry front and on the confirmation front, we are seeing that the 172 level is a breakout zone for this counter. The stability above 172 is very much important for the next leg of buying in this counter. So once any stability comes above 172 level, then new long positions can be initiated for the upside towards the 210, 215 levels.
Raj Kothari has got the next question. He's asking why Muthoot Finance has been under pressure. Should we hold it for a short-term perspective? He's not really given us a buy price, but the stock is down about 0.8%. If we can pull up the weekly chart just to reinforce this, it is down after its results, and it's down about 8% or thereabouts. The problems that this entity is facing is with regard to its microfinance loan book, and that has been a bit of a problem for the rest of the sector as well. But Sneha, on the fundamentals, would you suggest holding on, or is this something that you should take money off the table here?
See, I would suggest to hold on, because what we believe is that probably the issues that the microfinance loan side is facing, that is likely to peak out probably by next quarter. So from a long-term perspective, one can actually hold on, because overall the gold loan demand outlook is pretty strong, and the NIMs that the company is recording quarter after quarter is quite stable. So from that perspective, we can hold on. The microfinance, anyways, the issues, the headwinds are peaking out, and with the rate cut, with the RBI continuously cutting the rate, so that will ultimately lead to improvement in the overall demand going ahead.
All right. Ankitesh Ojha from New Delhi is asking this next question about Zomato, which is now called Eternal Limited. He's sitting on a profit of 24,000 rupees, so congratulations for that. He's acquired 378 shares, and he's wondering if he should exit or stay invested. This is not really a company that people invest in for the short term, at least fundamentally so, right? So, Sneha, on the fundamentals, if you're betting on a stock, a lot of people have spoken about this amidst this competition of who's going to deliver fastest and burning of cash. Some people are saying that maybe we've seen the peak of cash burn, but would you say that you should hold on to Eternal?
Oh yes, we should definitely hold on to it, because everyone knew that the company has front-loaded its investment into dark store expansion, and thus the profitability has got delayed by almost a year. But having said that, the Blinkit's GOV growth was pretty strong in Q4. It was more than 100%. And with the food delivery business continue to deliver the stable GOV growth. So overall, the things are as per the expected lines, and anyways, we are expecting the break even for the Blinkit to happen in FY27 start or FY26 end. So the long term opportunity is very compelling for the overall quick commerce space, and though the competition has heated up, but what we believe is that Eternal, with the market leading position, will definitely stand to benefit, because it has the upper hand in terms of expansion, and the balance sheet is pretty strong to support that expansion. So one should hold on to the stock from the long-term perspective.
In fact, just to support that, it's sitting on a 16,000 crore odd rupees cash to support that kind of expansion. All right, the next question is from Nalini, who's writing in from Mumbai. She says she's a senior citizen and she wants to buy L&T Finance. She wants to know if this is a good entry point and what could be the target for next 3 to 4 months. Amit, I'll come to you on this one. What are the charts indicating for L&T Finance?
I think we should wait for any new long position in this counter. The stock is approaching near its breakout zone of 180 level. Once the breakout of 180 gets approached, then we can create new long positions. For if the period of 3 to 4 months is there, then we can expect the target upside towards the 225, 230 levels. But 180 breakout is very much important in this stock.
All right. The next question that I'm going to take is from Vipul. I'm just going to pull that up. And he's asking about R System International. If we can pull up that counter. And he's bought at levels of 435. He's asking whether he should book losses and switch to another company because he's incurring losses of about 7,500 thereabouts. So, Amit, on the charts, what's your view?
I'm not seeing very much upside in this counter. There will be a sideways momentum in this counter. It can be switched to another counter like Ambuja Cement is looking positive, NBCC is looking positive at this point of time, and we can expect 10 to 15% value on an immediate basis in both these counters.
Okay, all right. We've got a caller, Murli, who's calling us from Bengaluru, asking about Ajax Engineering. Thanks so much, Murli, for calling us. How can we help you today?
Thank you very much, sir, for taking up my query. And I bought 200 shares of Ajax Engineering immediately after listing around 650 rupees.
Right.
Today it's quoting around 700 and odd. But I see, from my view, I see a bright future for this company considering the pedigree of 30 years old.
Oh, right.
Compared to other industries peers, it's relatively cheaper. Can I hold and add more pending results for the quarter now?
Okay. It's under a little bit of pressure today, but you're still in the green, I see. So you've got a long-term view, Murli, on this stock. Let me try and get you a view on the fundamentals from Sneha. Sneha, Ajax Engineering, any view here?
No, we do not have a view on the stock.
Okay, no problem. Amit, I'm going to try and get a technical view from you if you can. Ajax Engineering, bought at levels of 650. What's the view?
Currently, data is very much limited, but as per the data, whichever is possible, the support for the stock is at 660 level. If the position is on the long front, we should hold with the 660 support. If that level gets broken out, then we will see fresh short supply in this counter. Currently, the breakout for the upside level will be 730. Once the counter gets settled above 730 level, then again buying momentum will be witnessed.
Okay, so that's the view with regards to where technical stands for Ajax Engineering. The next question is from Santosh, who's writing in from Chennai. He's recently bought Rajratan Global Wire, 47 shares at 424 a piece for 1 year time period and wants to know if he can accumulate more at the current levels. Amit, a slightly longer view is required on this particular counter from a 1 year perspective. Should he add more and average out at the current levels?
Yes, more position can be created at this point of time because a major whatever negative need to be happen is already done, and I'm expecting not much of a selling from this point of time. Currently, the support for the stock on the downside is at 340 level. We should create new long position and can accumulate at this point of time with the support of 340 will be the stricter stop loss at this point of time. On the upside, I'm expecting the movement for the stock to be towards the 650 to 700 levels.
Krishna's called us from Kerala asking about Tata Motors. Krishna, apology, we're really running short of time. We've already discussed Tata Motors on the program, and Sneha believes that it's a hold on the fundamentals. You bought at levels of 700, which is actually a very good level to have bought it. NMDC, okay, no, we've got another caller. Rudra is calling us from Goa. Rudra, it's not the first time you're calling us, if I'm not mistaken. How can we help you today?
I had bought Ramakrishna Forgings about 2 months back for 710.
Okay.
And today I'm sitting on a loss of almost 18,000.
Right.
In this just in 2 months. So the price has come down by more than 100 rupees per share. I was wondering, is it worth holding on for long, or should I exit it?
Okay. All right.
By long, I mean at least a year I can hold.
At least a year, and if not more, right? So, but you bought it based on the fundamentals, is that right?
Yeah, that time it was doing well, and I believe there was some issue about their inventory management, because of which suddenly it took a nosedive.
Okay.
Okay.
Let me take your question to Sneha on the fundamentals. Sneha, Ramkrishna Forging, water levels of 710, so it's given up a little bit of ground. Would you hold based on the fundamentals?
We can hold on to the stock from a 1-year perspective because with the revival in the capex program that is expected, and given that the company has exposure to diversified sectors, right from automotive to railways to farm equipment, so it's a well diversified portfolio that they enjoy. Currently, automobiles and railways, these segments were witnessing a very moderate kind of growth, but now it's expected that from in another 2-3 months time, the growth should start reviving. So we can give it a time and hold on to it. Probably if he wants, he can average it at this level, and that will at least leave a room for the upside.
Okay. Okay, NMDC Steel is the name of the counter, and Mr. Venkat Ramanan wants to know about this. Water levels of 46.43 and accumulating for a period of 8 months. What should you do if you want to hold for another 1 year? Amit, on the charts rather, would you hold?
Overall metal space is looking positive and expecting more buying to be approached in overall metal counters. So long position can be held at this point of time, and long position can also be accumulated at this point of time with the support on the downside towards the 34, and the stock is having breakout at 42 levels. Once the 42 level gets a clearance, then we might expect the stock to move up towards the 48 to 52 levels.
Okay, so that's with regards to where NMDC stands. The next question is on NTPC Green. Nitesh Kapoor has bought 300 odd shares at 97 and wants to know whether he should add more at the current levels. Sneha, I'll quickly come to you on this one. What are the fundamentals saying for NTPC Green?
We are positive on the company, given that the government has a huge impetus on the overall renewable energy side, and the company enjoys a very strong portfolio. So we would recommend to hold on to it. Valuations a little on the higher side, but then given that the view is from the long-term perspective, one can actually continue to hold on to it.
That's the view with regards to where NTPC Green stands. But with that, Sneha and Amit, thank you so much for joining us. We're completely out of time on this edition of Ask Profit.
Thank you.
All right. As I said, we're completely out of time on this edition of Ask Profit. We'll see you on Monday. But stay tuned to NDTV Profit, because KYC, that is Know Your Company, will be right back on the other side of this break.
That's huge. That is a biggie. It's out there.
Gold Plus Clear Glass. Far ho ya near, sab kuch dikhe clear.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?